Testing, testing. Testing, 1, 2, 3. All right. Um, let's wait for a few, maybe 1 to 2 more minutes before we begin this webinar. All right. So for those who are in already, feel free to sit back and relax for maybe 1 to 2 more minutes before we begin today's webinar. All right. Okay, hey everyone, welcome to another webinar series. And today we'll be talking about trading gold, USD, and oil during times of geopolitical conflict. Okay, this webinar is brought to you by Everest Fortune Group in collaboration with Vantage Markets, an award-winning research firm and finalist in 2019, 2020, and 2021 for Best FX and Equity Research. So we work with the major financial institutions to help them forecast where the markets are heading. And now we have a special partnership with Vantage Markets where we are bringing you guys the good stuffs every week. Okay. So, as usual, this is the disclaimer. So, this webinar is purely educational and nothing in this webinar should be construed as investment or trading advice. So, please do your own due diligence before you guys trade. All right. So the agenda for today, what can we expect in today's session? So firstly, technical setups on safe haven assets such as gold, USD, and oil, right? The second thing will be understanding how geopolitical conflict has affected the markets itself. And lastly, what other instruments and assets have been affected other than gold, USD, and oil? So I'm your host for today. My name is Woon Hong, and I'm an investment analyst at Everest Fortune Group. Okay, so firstly, just a background information on and some basic info on geopolitical events. So what are geopolitical events? So geopolitical events, to put it simply, it occurs at the intersection of geographical factors such as natural resource access and proximity to countries in disaster or turmoil, right? So geopolitical events can manifest itself in many ways, and each event carries its own sets of risk. And with each risk, of course, comes with its own set of consequences. So two examples that we have I wouldn't say recently, One is recently, and the other one would be last year. So these are two major geopolitical events. So firstly, in last year in 2022, we have the Russian invasion of Ukraine in February 2022. And the most recent one, of course, all of us or most of us are aware of, is the recent conflict in the Middle East that began in early October of 2023. So, how do such events affect the financial markets? Right, depending on the scale and severity of the event, it could either leave a temporary footprint or create a longer lasting impact on the financial markets. So usually both the traders and investors seek out a path to investments and securities that are deemed as safe haven assets. So moving on to safe haven assets, right? What are safe haven assets? It is a type of investment or security that is expected to retain or increase its value during times of market turbulence or what we all know as market volatility. So traders and investors generally seek out safe havens in order to limit their overall exposure to losses in their portfolio during such periods of volatility. So for example, some of the safe haven assets that you guys know will be precious metals such as gold, forex currencies, treasury bonds, and this the fourth one would be you may not know, but it is the defensive stocks such as utility, healthcare, or military defense sectors. All right. So these are just the basics of safe haven assets. So you may ask, how is crude oil affected by geopolitical risk? So when the invasion of Ukraine took place in last year, February 2022, many commodities along with crude oil spiked as both Russia and Ukraine are key exporters of energy and agricultural commodities to not only Europe, but to many other key global markets, right? So since they are the key exporters, right? So this would affect both countries itself since they had the invasion, right? So this led to a huge increase in the prices of these commodities, which in turn functioned as an additional catalyst to what was already a high inflationary environment. So there was fear and uncertainty that the safe passage of these key commodities, including crude oil and natural gas, will be disrupted or even halted that causes their prices to surge. All right, so later on, we'll go on to the charts of oil and as well as gold to show you how it actually how this news actually affected the these assets. Okay, so moving on to 2023, where ongoing geopolitical tensions between Israel and Palestine have spilled over into a major conflict in the Middle East. So although neither country is a producer of crude oil, there is a potential risk that the conflict could put in nations from the wider region, which could then in turn impact production capabilities and even disrupt the world's most important sea route for crude oil. That's why, due to this ongoing conflict, right, we have crude oil being affected as well as your safe haven assets. Okay, so let's move on to after going through this basic knowledge of geopolitical events, let's move on to the charts. Okay, so yes, so any news for gold, any prediction? All right, so let's look through okay, let's look at oil first, right? Let's look at oil, WTI. Okay, H4 chart is Okay, so let's look at oil right here. Right, so this is we can see right here that oil right now has came down to a swing low support level right here, right? And after price touch this area right at this swing low support level, so instead of usually we'll draw the support level or resistance levels at the body of the candlestick, right? Because price may react to the body of the candlesticks. But see right here, this spike right here, down here, we have highlighted this area. Okay, so instead of using the body of the candle, we have used the low of this candlestick. All right, and price actually touched this low right here and is now going up. So the first obstacle that we need to look at would be this area right here. So this area right here is your intermediate resistance, whereby we need to see if price is able to respect this area because it was once a important swing low support level and it could act as a pullback resistance level because support once it's broken it could become a resistance, right? So this is just basic TA. All right, so you can see right here price is retracing to this level at 81.60. I would say 607, right? And if you see right here, we have a doji candle, right, followed by a bullish engulfing candle, right? So once we have these two candlestick patterns form together, this could indicate a signal for a reversal pattern, right? But of course, as mentioned earlier, this is the first obstacle that oil needs to go through. All right, so since remember the conflict has affected crude oil's prices, that's why we have seen a decline in the crude oil prices. All right, so right now this could be a correction to the upside if we look at daily. All right, so the body of price actually wick this area out and could possibly retrace to make a lower high, right? But this could mean that it could signify, wait, let me just draw it out for you guys, right? High, low, lower high. You would call this either equal lows or almost lower low, right? And price could potentially reverse in bullish. It could actually reverse to the upside, right? But we need to see if price is able to first break this resistance level, and then this is our next target. So definitely oil could recover and reach I would say at least $85, right? Let's see. Yep, so this is our intermediate resistance right here. And then if price breaks this support level, right, then we will look at this other support level where we have a 78.6% feeble projection projected by this daily time frame, because we project that price swing high, swing low, and swing high. So 1, 2, we are projecting price to come down all the way here. If price breaks this support level, then we are predicting that price could end up here to create a lower low. All right, so this area actually has feeble confluence because of the 78.6% feeble projection as well as the 127.2% feeble extension from this low to this high. All right, so but now price actually is becoming bullish, right? We may see short-term bullish before either reacting to this level right here or this first resistance level right here. All right, but if price actually manages to come all the way to this first resistance, we could expect price to create an inverse head and shoulders pattern. Okay, before going back up here. Right, because many of times, right? Let me show you guys an example of what I mean. So it could create something like this, right? Then create a inverse head and shoulders pattern before coming up. So this is your left shoulder, this is your head, this is your right shoulder, right? So let me show you an example of US 30, right? You see right here, price broke this low, came back up, came down to this level right here, in line with the left shoulder, and created a inverse head and shoulders pattern, right? So this could actually happen for oil if oil is able to come up to this first resistance level. All right. So this is just the general outlook for oil. And of course, you still have to monitor, like such as news and stuff like that, to see whether are there any recent news that cause oil prices to surge or drop. All right. But for gold, let's take a look at gold. Okay, let me just get rid of all this. Okay, so this is your first resistance. This is your swing high resistance level. Okay, this is an intermediate support. This is your first support. This is your second support. All right, so let's just take a look at gold right here. Okay, so for gold, this we have marked out our key levels that we should watch out for. Okay, so for this level right here, we have an intermediate support level right here, right where price is hovering above. Okay, we can see the price wicked this area out many times, right, before it actually broke past. So resistance broke past becomes a support, right? That's why we have this big wick over here, these small little wicks, right? So we can see how price would react along this 1978. These are what we call psychological levels, right? Because price is trying to, if price breaks this area, then it would end up at this first support level, right? Same as this area right here, where price is reaching this level around 2000, 2005 is your psychological levels, because once it crosses 2005, you know that the next target it will reach will be probably 2005 or 2009 to sweep liquidity over here. All right, so these are your gold could definitely come down to this level right here, right? Because there are liquidity areas to be taken out over here. Right, so we can definitely expect if gold dumps right here, we can expect gold to take out liquidity over here and here and here. Right, so these are your levels to watch out for, because if gold breaks below this level of intermediate support, then it could reach down to 1963. Right, you can see right here, gold is already starting to try and break this level of support. Right, but it may be a bit tough for gold to break this support. And if you see DXY, right, we need DXY to rise in order for gold to drop. But DXY is also at a key level of resistance right here. So if you mark out your levels, you can see that DXY is at a first resistance level right here and struggling to break past this resistance level, because you can see multiple wicks, rejection wicks over here. Okay, so these wicks indicates that DXY is struggling to break past, and if DXY dumps, right, then gold will go up. Okay. Yeah, so this level right here, right? So we can see it's possible if, let's say, DXY creates something like this, then we need to see DXY could probably range in like another 10 to, I would say, 40 more minutes before the London session opens, right? So the London session opens at around 3:30 and or to 4 p.m. where it's more volatile. So we can expect volatility to happen once is that timing, right? So timing is very important when trading forex or any currency, because you need to know when are the liquidity sweeps, as well as um the, when the volatility will happen. All right, so yeah, we can see right here gold should could possibly try to break this low right here. All right, and then try to we can look for I would say if gold breaks this area. Okay, if gold breaks this low right here, close below, retest, then we can enter. Right, if I were to enter gold, my stops placed above these highs right here, about a 43 pip stop loss, my target, I will target this area of liquidity right here. Right, so this is what I'm looking at for gold. But of course, you need to take into account the possibility of gold bouncing off this support level, right? Breaking structure over here and go to the upside. All right, so this is the more likely scenario, I would say, right? Because let's say price sweeps liquidity over here, then we can look for sells. But if it goes back up, then price will try to fill the imbalances over here, these levels right here. Okay, so just two very simple projections. But if we go down to, let's say, the 15-minute time frame, right? Gold could possibly go up from here. It's more likely for gold to possibly go up from here. My stops placed below this low 30 pip stop loss, right? Because if I switch on the line chart, what do I have? I have inverse head and shoulders pattern on the 15-minute time frame. Price is now testing the right shoulder over here. So what I'm looking at is for price to go back up, and if price breaks this the neck I wouldn't say neckline, but the body of this level of resistance right here, then we have an upside confirmation. Okay, so let me just switch back up to candles. All right, so this is something that I'm actually looking at right now. Yeah, so let's see. Okay. Um, okay, so this is what we're looking at. Yeah. So let's see if this works out for gold. All right, so I would say gold, if we look on the higher time frame, right? there could be a possibility for gold to retrace back up from here, because this is a strong level of overlap support right here. All right, so if gold breaks this low, then we have downside confirmation. But if not, gold will continue to rise up. All right, so we have about 5 more minutes before we see volatility happening, right? Other than oil, all right. Do you guys have any pairs that you guys want me to go through with you? Just feel free to type it in, and I'll be able to go through it with you guys. All right. So any FX pairs that you want me to um analyze for you and with you, just let me know, and we can analyze the pairs together. Ready? Euro USD. All right, sure. Let's see Euro USD. Okay, let's clear the drawings. Okay, so Euro USD right now is a bit of a headache, right? Because it's not as clean as we want it to be, right? Because as compared to before, right, the mid of this year, there were so many beautiful key levels right here, right? So you can easily let's say you price tested this resistance level, sell, resistance level, sell, resistance level, sell, right? And then you can either hold your trade or look at another key level right here. So it was a very beautiful timing for the mid of this year. But you can see right now that price is not as clean as we want it to be, right? If you were to look at price right here, okay, let's see this. Actually, we have a nicer resistance level over here. How many pips is this? 90? All right. Okay, so my game plan for Euro USD is actually for price to maybe dip around this level right here, right? And then retrace back up. So ideally, we're looking for price to come down a bit further, take out this low right here, and then come back up to this level. Because you can see right here, Euro USD right now is trying to create left shoulder, head, right shoulder, right? Left shoulder, hit, right shoulder. So for me, I like to trade this head and shoulders pattern because it's pretty easy to, I would say easier to trade, right? And it's clearer to me when, let's say, price does something like this, right? There I know that once it reaches left shoulder area, I will highlight it. And then I will look for sells, right? So what I'm looking at, let me just mark out the key levels, all right? So we have another support level right here and another support level right here. Okay, and remember we are on the H4 time frame. All right, so you need to mark out levels that are relevant right here and right now. All right, so if you were to draw this, right, and if you were to draw a Fibo, you can see right here, we need to see if price will react to this 78.6% level, or it will just retrace back upwards. Right, so we need to label this 78.6. Right, so we need to see if price will take out this low right here. Okay, so this low is important, and see if price actually respects this 78.6% Fibo retracement, or it will come down to our first support level. All right, and then let's just see. Okay, so if price comes down here, then we will try to look for entries for a buy, right? So anywhere in between from right now to here, right? We want to avoid trading because it just is not as clear as we want it to be, right? But if you want to, we can take a buy right here, stops, place below this week's low, all right? Keep it to a minimum, I would say. And then your first target will be this first resistance level over here. All right. So that's just the outlook for Euro USD. And the next level that I want to look at would be this level of pullback resistance level. All right, so there's a possibility that price could retrace to this pullback resistance level, and we can take a sell down to this first support. All right, so it's just how we adjust to the markets and to adapt. All right, then now we can see later on we'll jump right back into gold and see how gold is reacting to this level right here. Right, because just now I actually entered a long at around this area right here. Stops placed below this week's hit, and then my target is 1990. Yeah, about there. All right, so this is my target. Let's see how it goes later on. Yeah, so any other pairs that you guys want me to go through with you? Oh, and I'm in UCAT. I mean, oh, EuroCat too, right? Because I saw the head and shoulders again, right? Left shoulder, head, right shoulder. So I put sell stops right about here. And yeah, so this was about my entry right here. One, yep, about here. Stops placed above here. Okay, this was my entry. Target is right about here. Oh, AUD NZD. Yeah, sure. Let me go through with you. AUD NZD. Okay, so for AUD NZD, right? What I'm looking. Oh, let's see. Should be about the 61. Yeah. So right where price is trying to test this level of intermediate support right here, because right, we have a small little resistance right here, followed by a bullish engulfing candle. So there's a possibility that price could retrace from here, as well as we have the 61.8% Fibo retracement level. All right, so my stops, I will place it right below this low target. I will target this highs right here. The RR isn't so great, but honestly, I will avoid trading this. It's just a scalp trade, I would say, but I will avoid trading this pair right now because it's not at a proper um it's not at a proper level, right? So I will avoid trading this now. Okay, but if you look at it, right, this level is pretty interesting because even though price don't really have a proper swing high or swing low, but you can see acted once. Let's say we go to the H1 time frame, right? Resistance, respect, respect, break pass, respect as resistance. All right, so this could be a level, right, that price could react to. All right, so let's say I take a long here, right? My stops. That's the issue with my stops. Like this week is so long, right, that I am not really sure if I should. Let's say I want to take this trade. My stops probably below this 78.6, but the RR isn't so great either, right? So it's maybe if you I were to target here is to 1 is to 1.5, right? If I were to target this high right here, this high, let's see, uh, resistance. Okay. Actually, I can just label this as the support, right? Support. Okay, support number. Just put it here. Okay, so if I were to enter, I'll enter right about here. Yeah, it's either you enter now or you don't enter at all, right? Because price has already flown past about 3 to 4 pips. Yeah. So yes. Right, so no worries. Okay, so USD, yeah, but this is a risky trade. Um, yeah, so this is quite a risky trade actually. USD JPY and GBP USD. USD JPY and GBP USD. Okay, so right. So yesterday we had a crazy push upwards, right? To the upside all the way, breaking these highs right here. If I'm not wrong, yeah, it has reached almost the all-time high right here. I wouldn't say all-time high, but last year's high, last year's all-time high, right? So you can see right here that price could potentially become bearish for UJ in the short run before it reacts to this level of support right here. Okay, so let's draw a Fibo from here. Right, it's about the 50% mark. Yeah. Uh, okay, so just this level to watch out for. Right, I'll say 38. 38.2. Right, this level right here. Price could potentially react to this 38.2%. Fibo retracement from here. Okay, so if I were to draw a right, it's at this 61.8% feeble projection. All right, so let's see. GG. Give me a second. UJ. Right. Um, let's see, go again. Sorry, give me a moment. Interesting. All right, so let's see. Let's go back to UJ. Okay, so for UJ, right? So yeah, this is the level to buy from. This is what I'm looking at if I were to trade UJ. Okay, my stops, I'll keep it to the minimum because um but of course it will be at the key level, right? I'll put it right below the 50%. Okay, and then my target will be target right back at this swing high resistance level right here. All right, so this is my UJ trade. And for GU, let's take a look at GU. Okay, for GU, right? What we are looking at, oh, GU is just messy. I would say the only levels that you should look at will be this level of resistance right here. Or if we, let's say we take a look at the uh okay, then we take a look at the 1 hour chart. Okay, so right here, yeah, you see what I mean by this this pair is just choppy right here. Look at this whole area of consolidation. This could be your accumulation, right? And then your manipulation, etc. But it doesn't look as clean as I want it to be. So I'll say dodge GBP USD. It's not looking good for GBP USD and it's looking a bit funny. Like it doesn't have proper key levels, except like let's say you're scalping, right? Then um yeah, maybe this would look like a proper demand zone or something, right? This could be a demand zone for you, right? Then you could probably enter buys off here. Your take profit, maybe, yeah, let's say I were to enter longs, right? Right about here, stops. I'll keep it to the minimum, right? I'll get that 1:1.5 and then I'm out of here, right? Because GU is just looking so choppy right now and I wouldn't want to touch GU at all, right? I would rather for gold, no. If you missed the entry earlier on, I would suggest not to buy it right now because buying now is just very risky and price could potentially um drop back down. So I wouldn't suggest to buy gold. All right. So if you miss the initial entry right about, I would say, let's say we are on the 15-minute, right? Yeah, if you miss the entry about this level right here, 1977.5, right? Then I would suggest not to enter because right now price has created a bearish engulfing candle and it shouldn't look that good for gold right now, right? So I would say not to buy gold and you should trade other pairs instead. right? So it's really interesting, right? You guys can see right here, EJ moves like GJ, but you can see GJ has bounced off, right? But EJ is still trying to break past this first support level right here, right? It's trying to break this level over here, okay? And it may not be able to break past. It could potentially come up here to the upside, right? But you see GJ, right? GJ touched this level of support and is trying to reach this resistance right now to create a higher height. All right. And previously, this level for GBP CHF is pretty interesting, right? Is respecting this level of um overlap resistance. Okay. And price could potentially stop loss above this order block right here, right? And then if you were to align this, it's about at the 127, I think. Yeah, about there. Okay, it's about 127.2% Fibo extension, right? Before price is starting to come down right now. All right, so let's see how this fares. Okay, so previously I had an entry over late entry over here, 1.1047, and price reaches about 13 pips before it went back up to my entry again, right? And then price is coming back down. So let's see how it fares. But usually for this kind of situations, right, like this kind of patterns, price would most probably come down here, react to this level, then come back up here, right? So it's a bit of a it's just two situations. It's either it will, right, come down here, react off, or it could come down here, break this low, come back up, retest, then it's a better sell entry. Okay, but yeah, this trade is just playing ping pong right now. It doesn't really want to move that much, right? This GBP CHF. Let's see. Cool. CHF JPY is going up as well. You can see all the JPY pairs are actually going up, except for EJ, which is pretty weird, right? You see, AUD JPY also going up, NZD JPY also going up, CAD JPY, minor movement, but EJ just doesn't want to budge, right? Let's see if there are actually any news for today. Uh, USD. Oh, we have tonight we have the USD ADP, non-farm employment change, before the NFP this Friday. So please watch out for this week because we have NFP. So I wouldn't want you guys to be unaware of it. So please be careful. All right, for NFP. Okay. Yep. So EJ finally bounces off. All right. 15 pips is reaching a level of resistance right here. Yeah, so this is now the volatile period. I'll say the next key level that we need to watch out for would either be this area right here, where price would react, or yeah, you can see right here, gold came back down, right? So it's not as easy to trade gold, right? Because you see right here, was in profits, and then I'm now at break even right here. So yeah, it shouldn't. It was just a very quick scalp, right? Okay, so yeah, gold doesn't really look that nice. DXY, we need DXY to come down before gold will go up, right? But DXY is actually rising, so that's why we have gold coming down. All right, so just have to watch out for that. If DXY rises further, right? If DXY rises even more, breaking past this resistance, then we can expect for gold to break these lows right here and then fall. All right, so this is something that you need to watch out for. Yeah, so let's just see how this works. Yeah, let's see. UCAT is still in the highs right now. UCAT looks like there is actually very nice bearish divergence, right? But the problem with UCAT is that it moves pretty slowly, right? And it's kind of choppy, except for this move right here, right? Apart from that, um, I would say, let's see. Price put this low, retest. Not sure. On the 1 hour time frame, it doesn't look like there's anything right here. So I will dodge this pair. UCAT just looks like it wants to stay within this range, right? Before breaking out and coming here. So this is just one of the basic patterns, right? Yeah, it looks like it just wants to do this. All right, so for UJ is also going up. Buy opportunity present. Not sure how long it'll take for UJ to come down here before we take another buy. But yeah, so there's for UJ and you. Nothing much. Gold still hovering at the support level right here, refusing to budge. Let's see. Okay. Um, yep. So yeah, so we've gone through most of the pairs that we should watch out for this week. And because of the news, let's see how the USD pairs will actually fare. All right, because it may be slightly dangerous to trade these pairs right now because this week is very, very volatile, right? We have the USD news, especially your NFP days, right? So you have to be careful for that. All right, so that's the end of our webinar today. All right, I hope you guys learn more about how geopolitical events can affect these pairs, right? And see how these pairs move according to news, etc. Right? Especially for your commodities, right? Because they are more volatile than normal currencies, especially gold. All right, so thank you guys for being attentive and also engaging with me and asking requesting for forex pairs and for asking questions. All right, so thanks guys for attending this webinar, and I'll see you guys next time. Remember to stay safe and trade safe. All right, take care and bye bye.